All right, hi everyone. Mark here, Mark P Markets. Thank you for joining me for another Greenbridge Investing market analysis. I'm not simulcasting today, which means I could spend more time on your questions. Okay, so if you're new to the chat, please share your symbol or your market in the chat now, so that once I complete my portion, I can then look to the chat and answer your questions. Okay, so, and if you're asking about an altcoin, just please make sure to put USD or USDT after the symbol. All right, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, let me know if my microphone is better. Okay, hold on. Where's my chart supposed to show up there? And it's not showing up. There we go. Okay, so let me know if my microphone is, I was getting some complaints about it the other day. I think I fixed it, so let me know. Okay, anyway, so we're going to talk about Bitcoin, we're going to talk about the stock market, we're going to talk about gold, and then we're going to talk about anything else that you guys want to see. Now, I want to start with this, right? So I got Bitcoin up here, and drama, right? Drama. We had a lot of drama yesterday. Drama. And you can't get caught up in the drama, first of all. All right, I know everyone wants to know why, this and that. I don't even know why it sold off. I don't care. All I'm interested in the levels and the price action, right? The other thing is, I've talked about, you've been following me for a while, so you all know that I've been talking about the riskiness of this area up in here, said it was not attractive, and of course, the low 60Ks, I was very pessimistic up at those prices. Now, was I able to tell you that this thing was going to be cut in half over the next 2 months once we touched 65K? No, of course not. But I knew that the risk was too high, okay? I also knew that the risk was more attractive at 50K. As you can see, there was buying activity there, but it couldn't follow through, right? We never got confirmation. So that's an important point as to why confirmation is so important, because we could sit there and I could say, well, I think 50K is a good price. And that was my opinion, right? But the market wasn't agreeing with my opinion. So that's why I don't trade on my opinion. I let the market tell me when it agrees and when it doesn't agree. And sometimes it will agree and then stop me out anyway. Okay, so that's just the nature of the market. Now, let's talk about where we are right now. So we had some people in our chat room step into this pullback, which again, is very aggressive, okay, stepping into this here. And some people have done very well in that bounce. And that's very, it makes me happy to know that a lot of our members had the confidence to do that thanks to being in our chat room for like 2 years. So even though we didn't make any calls, right, we didn't call this bottom or we didn't call any trades here, we still had people confident enough to step in front of it because they recognized the risk and the probability. Okay, again, this would be very tough for us to call something like this, by the way, because of that risk. And we try to be very conservative because we do have people that are, we have people at many different experience levels, and we can't just, throw lots of aggressive trades out there. Anyway, so here's the thing. Are we interested in a swing trade around these levels? Sure, this is definitely not a high, okay? We're definitely near support, but the thing is, we have an inside bar right now, all right? We have this inside bar, and it has to close, as you know, first of all. So we still have a few hours before it closes. If it closes and it takes out the high, okay, which is 43,000, that's technically a buy signal. But the thing is, because we broke 40K, which was a very important support level, because we broke that, now we're struggling with it, right? I mean, where are we now? We're basically at 40K right now, but we closed below it yesterday, okay? So because of that, that confirms for me that we're in a wave 4. So as you know, I've pointed out a million times the gold situation, right? Gold is doing much better now, but for about 8 months, gold was full of false starts and false breakouts, and it worked its way to a 1675 low that no one was expecting, right? Bitcoin could go into a similar situation. That's a typical wave 4 corrective consolidation. That's a possibility, right? And because we broke 40K, that's the possibility that I'm going to lean toward. Now, of course, the market can change at some point and we'll change our outlook. But what this means for me is I'm going to be adjusting expectations. Does that mean I'm going to stop buying? No, not at all. There'll be buying opportunities, but I'm not going to be placing my targets at 55K or 60K, because at this point, while it may eventually work its way up there, since that could be the range high or maybe slightly higher, I'm not going to anticipate those levels. I'm going to be looking at more of like the 50K, low 50Ks, where that support was, because now I'm going to be expecting resistance. Okay, 48K, that's where target expectations will be placed in a wave 4. Keep in mind, like I said, wave 4s are full of false starts and false breakouts. Now, here's the other thing you need to keep in mind about wave 4. We don't know, 30K was not a level I was anticipating for wave 4. I figured 40K would be the range low, right? Well, we made a low much lower than that. If this inside bar low gets taken out, which is 35K, then we can reasonably see another test of that 30K area, okay? So again, the whole point of these price action forecasts that I do here is to get an idea of potential scenarios, okay? People are always obsessed with predictability. Tell me where price is gonna be, a month from now. No one knows, right? And if all these great experts knew anything, why wasn't anyone calling for this move back in February? When was this peak over here, by the way, at 64, whatever? That was back in April, right? April 13th? One of our members in our chat room pointed out something funny. He said around that time was also the IPO of Coinbase. Interestingly enough, right? The smart money knows when to get out, and they IPO'd Coinbase at the peak. How did they know that? They have a much better sense of sentiment than we do, because they can actually see the accounts and they can see the orders. I'm talking about, Coinbase. Now, so my point is this: if you're following these fake gurus or these self-appointed authorities like on YouTube or on some of these other platforms, and they're trying to convince you that they can predict where price is going to go, either they're fooling themselves or they're just good marketers, okay? And they're just trying to market something to you. I had a nice compliment from our free chat room earlier, and Bill said basically that he likes my no-nonsense, perspective on things, and that's what I try to promote. Like I said, I don't sell dreams, I don't sell hope, I promote reality, and that's usually what people don't want to hear. So anyway, so my point is this: we break that low, we can see 30K, and it's possible to see lower numbers, but we have to see, okay? If we get the break of the high instead, I'd be interested in an aggressive swing trade long, but just keep in mind the risk is going to be a little higher than usual, because this bearish momentum that we had, this break of 50K and 48K and break of 40K, that momentum may still be in play. Okay, so we have to keep that in mind. An inside bar is not exactly structure, especially after it's taken out a significant support. Okay, I like inside bars when they are higher lows, not lower lows. This is a lower low. Clearly, it's a lower low. All right, so anyway, that's Bitcoin. Now, let me jump over to the stock market real quick. I want to talk about the stock market. I spent 8 minutes on Bitcoin. Well, I like to talk. Let's talk about the stock market, and then I want to talk about gold. And then I'm going to get to your questions, okay? So the stock market, tricky. Look at this. So we had this pin bar yesterday, right? And I talked about it. I said if we break the high of the pin bar, we have a buy signal. Look at this. This is ridiculous, all right? I mean, it's just vertical. So, in fact, I had a question in the chat room about taking another position in the SQQQ. I believe Anna asked that question. And Anna, this is your answer. This is really, if you're going to do it, this is the place to do it, okay? And you'd be anticipating a failed breakout, which there's no sign of right now. So it's very aggressive, stepping in front of this potential breakout. Now, like I suggested, don't do it with the options. The options are the time decay, the theta decay on these options is ridiculously high. So, a month could go by and this thing may not go anywhere and your options lose a ton of value, okay? Even if this thing just kind of goes range bound or whatever. So you're better off buying the shares outright, okay? Buying the SQQQ outright, which is not overly expensive. So anyway, so I'd consider something like that, but there's no sign right now. This is, in fact, not only did we have the buy signal yesterday, but this is a breakout on top of it. I mean, this thing is up, what, 282 points today? So the question that you have to ask here is this a market reversal? Are we going to go for new highs? I mean, it's possible, But the thing is, we made the higher high. I want to see, do we get a higher low after this? What kind of price action do we get after this candle? If tomorrow or early next week we give this back, then I know this is nonsense, okay? If we hold or we barely pull back and we get like an inside bar or something and we don't test this support again of 13,150 or whatever, we don't test that support again, then the market is finding support and it's probably going to be working its way higher for whatever reason, okay? I don't care what the catalysts are. I don't care, what the Fed is doing. I don't care any about that stuff. So for swing trades, this is important, especially when it comes to stocks. I've been looking at some stocks, like look at Square, right? A lot of these stocks are in great locations. Look at this situation right here. And you're coming off of this range low. I love that location. Tough to buy this candle right now, but we get a breakout above, 208? This thing may be a nice play if the NASDAQ continues, all right? But the thing is, the NASDAQ, 200 points or whatever in one day, it's kind of a lot. I want to see how this thing, I want to give it a few more days. We can't react to these things, right? So look at the S&P 500. Same situation. Now the S&P doesn't look as nice as the NASDAQ. The NASDAQ has a little bit more of a stronger looking structure. This thing, the NASDAQ was pushing this high, right? The S&P is not pushing it yet. So this could easily turn into another, top or resistance. We have to see. So we can't make any prejudgments. My point is, the stocks are still not out of the clear. If you want to take aggressive positions, which, that's up to you, in stocks that are showing buy signals at least, just be prepared to get out if things turn the wrong way, okay? And what I mean by things turn the wrong way is the broader market. You have to time your stock, especially your swing trade, stock trades, okay? Your swing trades, you really should evaluate the risk of the stock market, the broader stock market first, okay? So we have to see if this buying continues. All right, so that's that. Now, gold, real quick. All right, real quick. Gold reached our third target. Okay, I sent out the swing trade back over here, which was March 30th. Okay, at the 1720 break of 1720 high. You could see the trade information right here on the chart, and it went to 1880 yesterday. Right, the high was 1890. This thing is at 1874 right now. It reached all three targets. Okay, the point is, how long did that take? Well, March 30th all the way to May 18th. That's how long it took to reach all three targets. And we had to sit through some nonsense. It's not like it went straight there, right? So that's the nature of a swing trade. It's a nice example. Now, speaking of gold real quick, as you can see, this formation, this overall formation, is this a wave 5? Because we've been in wave 4 since the August peak, right? I talked about this, and this is what Bitcoin can look like over the next 6 months. Something like this, okay? Minus that nice bullish leg, right? Something like that. It's full of false starts. It's a mess. So all these geniuses, all these self-appointed experts, they're going to be so confused in this. They're going to be calling for longs, they're going to be calling for shorts and blah, 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 because they're watching their 5-minute charts. And meanwhile, they don't realize that this is just one big, broad corrective move in a broad bullish market, right? Gold, there's nothing bearish about gold when you zoom out. Nothing bearish. So if we have this inflation situation, I mean, I was watching something about the FOMC minutes yesterday, and it was just funny because they were interpreting the FOMC minutes, the FOMC meeting minutes, and the FOMC, or the Fed, admits that there's some inflation and that they're prepared to act and blah, 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 right? That's what kind of got the market a little uncomfortable. The point is, if they raise rates, this party in gold is going to be muted. I'll just put it that way, muted. So you have to watch out for something like that. I'm happy we're out at target 3, and if we get any significant pullbacks, we'll look to get back in. Anyway, that's gold. Silver, look at AG. This trade, a stock trade I sent out to our members a couple of weeks ago, this trade, there was about 2 weeks of entry opportunity. 2 weeks! This thing fluctuated between 16 and like 14.5. The stop was 14. It never went there. So this thing is working now. Can't chase it, all right? If you didn't get in during that time, you have to just let it go, right? And that's what you have to do when a trade goes from within your scope of rules to outside your rules. You don't chase it because the risk is higher, and that's what you need to focus on first, risk. Okay, so that's my my rant on all these things, my update. 14 minutes, not bad, 15 minutes. So what I want to do now is go over your questions. Again, if you like the video that I'm doing, if you press the like button, it gives me some valuable feedback. It also helps, I guess it helps the video get more exposure on YouTube. So that would be helpful. Anyway, so let's say hello to everyone in the chat. We have Jay, good to see you. Anna, okay, could you please give us an update on long-term target for gold? Okay, since I'm on gold, and also Shopify, okay, we'll talk about that. So let's go back to gold. Since Anna's asking about gold here. All right, now, long-term target on gold. I mean, right now, so my question before was, is gold in a wave 5? Well, gold has to confirm, right? And the thing is, with Elliott wave, you could be in a wave long before it confirms. The confirmation for a wave 5, to know that we're a wave 5 in play, is up here. All right, way up there, the August high. So that's a long ways from here, right? We could be in the wave 5, but you know, what are we going to do? Like, you can't buy this now and say, well, it should go up there, right? It might, but if it fails somewhere between here and there, we're still possibly in the wave 4 because this is not confirmed. You need to take out the previous wave's high to confirm the new wave. Just like when you're in a wave 4, okay, and you have to break that wave 3 high, right? And that's what's going on here. So we haven't broken it yet. So technically, we don't know if we're in a wave 5, although it could be. There's a good chance that it is. Now, as far as longer term targets, that high is really the key level. You also have this other level right here, okay, which is what? 1950 area. So that's a longer term level. If this thing can clear that, then there's a good chance we're going to continue higher, right? And we're probably in that wave 5. Keep in mind, gold is in that seasonally bullish time for at least a couple more months. So there's a chance that it could work its way there. The thing with gold is buying this now, like I'm saying these optimistic things, but is buying this thing now a good idea? Probably not at these prices. I mean, if you see, we exited gold, right, at 1880. We're out. We got in at 1720. So risk is high in this area, right? Wouldn't buy it now. Wait for a pullback. So the pullbacks, you know, you're looking at what, 1830 area, like 18.25. That's your first minor support area on gold. So I'd be looking for something like that, or maybe slightly lower, right? You have this area here. What is that? 18 even area, right? The whole area there, 18 even area, I'm going to call it. So you have, if you get those type of pullbacks, those would be attractive places for gold. I wouldn't be surprised if the Fed came out and opened their big mouth, you know, somewhere between here and there, and they another, you know, hint about interest rates or something that can, you know, scare gold. So that's the type of buying opportunity you want to see. Of course, you need confirmation, right? And I'm talking about the swing trades. So those are the levels for gold. Again, this is a bad place to be buying, good place to be locking in profit. All right. So, and silver is going to be right behind it, right? Silver is going to be right behind it. People are asking about silver. You're going to see when gold is at a high like this, you're going to see a lot of hype. All the gold people are going to come out, gold will be at 5,000 by next week, right? You're going to see a lot of that nonsense. There's no gold in Fort Knox. There's a total shortage of gold. You can't find it anywhere. Yeah, right. Okay. Meanwhile, Interactive Brokers, by the way, for those of you that don't have Interactive Brokers, they have a thing, right? They announced a new product where they're selling. You can actually buy a gold future, 1 ounce gold futures contract, and take delivery. They'll actually deliver the physical gold to you. So there's a shortage of gold, but somehow Interactive Brokers is able to get their hands on some physical gold, and they'll mail it to you if you know, request delivery. Anyway, so just something to keep in mind there. All right, so that's gold, and that's an honest question. Thank you for asking. Hey, Will, good to see you. Mike is good, because I had a lot of complaints about my mic the other day. Okay, hey, it's Dan from Romania. All right, cool. Hey, Dan. All right, no problem. Shubham. Okay, Mike is good. All right. Any BTC USDT advice? All right, so I just talked about Bitcoin for about 10 minutes. Binance got frozen. Oh, all right, what a surprise. Okay, those exchanges, again, they're going to have those situations because they probably could not handle the volume. Like, I don't think it's a conspiracy theory in those situations. I just think they're just not prepared for the type of volume, and their system, you know, just can't handle it. So like I said with Bitcoin, I outlined all that stuff. Now, as far as, here, let me go back to the chart real quick. All right, as far as bigger picture, right, because not everyone wants to swing trade this thing, and that's understandable. Bigger picture, are these bad prices for inventory? No way. These are great prices, okay? Any price is good for inventory. What the key thing is the size. So, you know, if you, again, you have to have some sort of target allocation and some sort of total investment amount determined in advance. So like I'm going to use $1,000. I've talked about this example before. $1,000, for example. You have $1,000 you want to invest. You can split that up into 10 $100 purchases. Should you buy one here? Definitely. Should you put a limit order at $35K for $150? Why not? You know, put maybe another one at $30K or $31K for $200. That's when you want to buy more of it at those ridiculously low prices. Now, keep something in mind. That idea, if it breaks 30K, you only have a few purchases made, right? And then you can make some more purchases until you reach your $1,000 limit. Keep something in mind. When we had this pullback and this thing was breaking 45K, 43K, you had people with that same mentality stepping in thinking, oh, how much lower can it go? No, it can't go there. 40K, that's got to be the bottom. That went to 30K. So you can't go in with that type of mentality. And you can't go in too big. You have to have a predetermined plan. Okay, I'm going to buy $100 here, $100 here, $100 here. And then you let the market do the work for you. It taps you in. And then maybe if this is the bottom, if this bottoms out, it's okay to buy at higher prices too. Okay, again, but like for example, when we were at 55K or 60K, what was I saying? And what was Andrew saying? Small bites, small bites. So if you were buying $50 worth up here or something like that, and it does this to you, you're not going to get shaken out like everyone else, okay? So anyway, thanks for asking that question. All right, so let me see what else I have here. Okay, 2050 good. Okay, good question about the daily, weekly moving average of 20 and 50. Those are good for like basic trend analysis, but the thing is, you can't go by that. You can't judge a trend by the moving averages. Moving averages are backward looking, no different than an oscillator, okay? They're looking at price over some period of time, and it's just a line on your chart. So it's like looking in the rearview mirror. You have to look at the broader trend on this thing, although it may be changing, it may be going into consolidation as of the break of 40K. You're going to say, well, we're below the moving averages, right? It's bearish. Well, don't be misled by that, because when we zoom out, this is not exactly a bearish structure, okay? It's a little more extreme than people would have liked, right? It pushed some supports, so it could be changing. But markets don't go straight from bullish to bearish, especially on the bigger picture, all right? That usually they consolidate for a while. So don't be misled by them. So I would have to say that no, those are not good to analyze a trend. You have to look at price action and levels. Okay, Elliott wave is a much better tool than moving averages. All right, EOSE, stock. Okay, let's take a look. EOSE. Oh, interesting. An energy stock. So, wow, this thing, talk about giving back most of its bullish structure there. Wow, that really gave back a lot. Okay, so this is interesting because it's changed, right? And here's the change. It took out this high right here. Okay, see that? Took that out. Just took it out today. That's a good sign. I mean, that's a bullish sign. Now, that's also a breakout. If you take a trade like that, it's very aggressive. How much is this thing? $14, $14.83? Okay, not bad. Because it's aggressive because where do you define risk on something like this? Yes, it's a bullish change, but this is a tough spot to buy because it can still fake out, right? It can still fake out in this area. So you're looking at like something like this over here. The more ideal scenario, if it can give it to you over the next few days or maybe early next week, would be pullback to this area here, which is what? Around $12.25, something like that. That would be a good place, okay, to consider a more conservative long because you're looking to buy the higher low. Of course, it has to confirm, right? So you have that possibility. Now, it doesn't mean it will do that. You just have to be prepared in case it does. I know Jay knows that. I'm just saying that for other people that may be new here. Now, the thing is, if you take this now, though, right, you take this now, where is your risk? you can look at that 12 quarter as one place to get out if you're wrong, like if it just cleans right through it. But really, structurally, the risk is here, which is, what is that, 10 and a quarter, right? That low, right? Because really, this thing has no business. If it's going to stay strong, it has no business going back to that low. If it goes back to that low, that means this is complete nonsense, and this broader trend is starting to turn bearish. Some people say, but isn't it bearish? This is not exactly bearish. All it was really doing was correcting the broader bullish move, which it gave back like 100% of it, right? And then turned right around. So I wouldn't call this a bearish trend, especially now that it broke this resistance. You know, when it comes to evaluating trends, bearish trends don't break resistance levels. So that's just another piece of evidence right there. So that's how I would treat that. You have to decide if you want to, you know, work with this or not, and what type of trade it is too. If it's a swing trade, everything I just outlined is really from the swing trade perspective. Okay, so thank you for asking about that one. Okay, Ford. Okay, let's talk about Ford. All right, and hold on a second here. I think, let me just go back. Oh yeah, you know what? I'm sorry, Anna. She asked about Shopify earlier. It just occurred to me, and I totally skipped it because she hid it in the second part of the question. All right, so hold on. Let me just do Shopify real quick, and then I'm going to go to Ford. All right, so Shopify. She asks, you know, we had a swing trade. This was a trade of the week, I believe, that we sent out a few weeks ago. And this thing was tricky. Now, it went through 1160. I thought this one got stopped out because it was a buy limit order, okay? The low was, this thing actually stopped out because the stop loss was at 1060 and these lows are at 1047. So the trade of the week is a stop out. Now the thing is, if it got back in at 1160, where's this thing right now? 1210? I mean, this thing, you can't buy this thing now, right? If you're in from 1160, then you just let this thing do its job, right? Target one is 1230. It's not that far away from there. But you can't chase this. So, I mean, look where you are. You're right back into this resistance area, basically. So I wouldn't touch it now. That's, again, something you had to be on top of. And again, this, like for the trade of the week, it stopped out. They don't all work. Anna knows that. But some people, they join us thinking that every trade we call is going to work, and that's not realistic, right? We get plenty of stop outs. What allows our whole system to be profitable is the risk reward. Right, so we win more than we lose. We win. It's the amount. That's how that works. Okay, if you're not working your trades like that, you can't win. So, and again, that's particular to swing trades. All right, so thanks for asking about that. Let me jump back to Ford. So here's Ford. Now, similar situation. Look at this pop today. Right, obviously there's a lot of optimism still in there in these things. The range low on Ford. Let's actually start with the trend. Broader bullish trend, we can't argue with that, okay? Broader bullish trend, no problem. Recent or midterm price action, we can argue, is more of a consolidation. Okay, fine, no problem. These type of consolidations tend to be broader continuation patterns, right? Trend continuation patterns, no problem. So the thing is, where do you buy this thing now if this thing's going to work its way higher? Well, not at these prices, because first of all, this is a really bad candle to be buying into. Really bad candle, because this is most likely a fake out, right? You have a resistance right there, and you're getting all that indecision, like a doji-like candle right there, and it gapped on top of that. No way would I go near something like that, okay? Now, so where do you buy this thing? Just like that other stock that we looked at earlier, I think it was EOS, the higher low, right? You're looking for the higher low, which is about basically around $12, around, or maybe the high 11s, right, around there, or another test of this low, which is 1136. So you figure around 11 quarter. That's really the areas that offer better probability and better reward risk. Just keep in mind, you know, a lot of these companies, they're good companies, right? Ford's obviously not a bad company, but they're reacting to these situations. This is definitely going to be like a market stock, right? And we have this situation with the S&P. The question that Ford needs to answer is, what is it going to do if the S&P retests this low here, right? Is it going to go back to its low, or is it going to hold? Those are the type of situations where if it's holding, that they become more attractive, because then they're acting relatively strong to the broader market. But the fact that S&P is like at a resistance and Ford is all the way up where it is, I don't know, too risky, right? This thing can pull back easily. Also, even for a inventory trade, an investment, I prefer better prices. You know, like I just said before, you can buy inventory at any price. It's really not the price, it's the size. So if you want to take a small bite of Ford because you like Ford, I would suggest a very small bite because of the risk right now is just too high. It's very possible to see better prices. Okay, Jesse, from your neighbor in Poughkeepsie. Oh, nice. He's from the. You know, I was going to mention. It's funny you mentioned that. The other day, I was on TradingView. You know, I always ask people where they're from, right? What countries they're from, and I get countries like places you'd never expect. It just always impresses me how the reach of TradingView. Meanwhile, I got like no one from New York. Okay, I got people from across the entire world. I got people from countries, like I said, where like, wow, it's just unusual to hear of such a country, and then no one from New York. Where are all the New Yorkers? Unbelievable. They're too busy, I don't know what they're doing. Anyway, so we have a New Yorker, but he's from like upstate New York, so it's not the same as the city. Anyway, cool. Thanks for joining, Jesse. All right, so here's his stock, BNTX. All right, interesting. This looks like it's one of these, I'm guessing it's a biotech something, all right, whatever. Broader trend, this is a nice move, right? Broader trend is definitely bullish. Current price action, not so attractive, all right? You have potential double top area. So if you're in it, this is a great place to reduce risk, okay? Take profits off the table. Maybe you're in it from a great price. You can also, if you're in it, you're a strong hand, right? If you're in it from a great price, and you can give it a chance to see if it breaks out. The current candle is not bearish, okay? Which means it may go higher, but the risk is very high to buy new shares here, right? That's the problem with it. So if you're looking to buy new shares, your first support is here at 189, okay? That's your range low. I don't know what this mess is over here. That could be, some kind of news report or something. I don't know what that is. But your first support based on these two touches right here is 189. That would be a much more attractive place. Now, if this thing breaks 189 decisively and closes below strongly, your next support after that is here. Okay, unless it can prove a support at some point in between, which again, you have to let the market show its hand. That's 120. So in that type of scenario, if it breaks such a level, that's when you have to take the loss. Otherwise, you're looking at potential 120, right? That can be very painful, especially if you're too large. So that's what I think about that, but generally strong. So, definitely a good stock for the radar. Thank you for mentioning that one. And thanks for joining from Poughkeepsie. Poughkeepsie. I don't even know if I'm pronouncing that right. I should, right? I'm from the East Coast. I should be able to pronounce that with our accent. Anyway, Gabriel, hey, good to see you. MATIC. All right, so XX is asking about MATIC, USDT. Let's see, I haven't looked at this one in a little while. Let's see, how's this thing doing? Because you mentioned these altcoins, right? And this is a good example. Now, a lot of these MATIC is not getting beat up as badly as some of the other ones. But again, when Bitcoin had that pullback, you realize, right, from the Bitcoin high to 30K, that's more than 50%, right? That's more than a 50% correction in basically 2 months, okay? So all these people that bought into all these altcoins with all that optimism, that's the kind of risk that you're looking at. That's why I'm so against buying altcoins. I remember we had someone in one of my streams say, and this was at all the height of all that nonsense, someone says, oh, I saw somewhere that one of these authorities was saying, we're just beginning the bull market, a broad bull market in Bitcoin. And I got all excited. I said, at 60K, we're beginning a bull market? They need to rethink that, right? Well, anyway, so now if he came out and said it at 30K, then I'd be like, all right, well, at least the guy is, a little more reasonable. So anyway, my point is this. So this thing has been strong. How much did it give back on that Bitcoin move? 33%. That was a 33% candle, right? Negative 33%. So a lot of things got hammered. It's doing a very similar thing to Bitcoin right now. Okay, you have the inside bar. In my opinion, again, just an opinion, the risk is still too high in many of these things. This thing's proven that it's going to follow Bitcoin, even though it seems to break away. because it made this high of what, $2.70. It made that high while Bitcoin was not making new highs, okay, which means this thing was doing its own thing and ignoring Bitcoin, all right? And maybe it's following Ethereum more closely. I don't know. But my point is this. Bitcoin pulls back that big number, these things get hammered, which means they're still dependent, is what that means. Now, I suspect that the bearish momentum in Bitcoin is not out of the way yet, all right? It's still possible that we test 30K. What is this thing going to do if we do that? That's the question. So I wouldn't touch this right now, right? One inside bar, although it's nice and it is a higher low, all right, I was just saying before, I don't like to buy inside bars that are lower lows, right? This is a higher low relative to this high over here, right? We have a pullback, it's a higher low. I'm sorry, I meant relative to this low over here. So that's all good, right? That basically meets the rules of the swing trade strategy, but you just have to keep an eye on Bitcoin because this thing is still dependent, right? So technically, if you take out the high of the inside bar, which is basically $2.20, that would be a buy signal, but you're buying it near those highs, and the risk is very wide, right? This is a pretty wide candle relative to this thing. So if you want to get involved, if you're looking for a swing trade, these are your prices, right? You're looking for something around, what is that, $1.30, $1.33, maybe slightly lower, in this area here. What's that, 79 cents, 80 cents? Wow, it's hard to believe it can go that far. But as you saw with Bitcoin, anything is possible, right? So my point to these forecasts is, you want to note those levels and then see if the market can provide those opportunities at some point over the next few weeks, all right? If the market never provides that opportunity, well, you decide then if you want to take that aggressive risk. But it's your responsibility to manage that risk, right? And that's the thing that people don't want to hear about, right? They don't want to hear about risk. Like, I'm not here to make risk. I'm here to make money, right? That's what they want to hear. Well, you have to be able to manage that risk, meaning if you buy it near the high and it turns on you right away, you should probably get out and take the small loss. I mean, yeah, you're going to get faked out sometimes, but you're not going to get faked out lots of times, right? So, you take your small loss, and if it goes higher one time or two times, so what, right? But if you take that small loss and you've just saved yourself from a large loss, that really is what puts you ahead, especially when it comes to short-term performance. Okay, so thanks for asking about that, MATIC. Well, I spoke about that one for a while. All right, let me see what else I got here. Should we sell all the altcoins that took and reinvest in Bitcoin, or should we somehow farm more of them? Okay, that's an interesting question from Schwartz. So should we sell all altcoins? Well, I wouldn't be that overreactive. Okay, let's take a look at let's take a look at Litecoin, right? Litecoin's a leader in one of the more prominent altcoins. Or maybe you have some specific altcoins you'd like me to look at, but let's look at Litecoin. So Litecoin got beat up pretty badly, right? Considering, like, just comparing the two we just looked at, Litecoin got beat up much more than MATIC there. So should you sell them all and just put it into Bitcoin? I would hold off on doing something like that. What you want to do is reduce risk, not put it all into Bitcoin, because it's all the same trade, right? They're all following Bitcoin, so it's not really going to be that much better. If you want to reduce risk, have your money in your local currency, and you keep it there until these things start showing stability. Or you want to play the inventory game, I would just reduce exposure, especially if you get a bounce in these things, right? And you get a bounce up to like another resistance. Like right now on Litecoin, for example, 335 is the resistance. You may not get that far, right? This thing may not get that far if Bitcoin turns sooner. So if you get an opportunity to unload more, this is your chance to reduce your exposure. And now what do you do with that money? Again, I would keep it on the sidelines and wait until stability develops, because again, this space may become much more hated. Also, it's not like we're going into a bear market. You're going to have a lot of bears come out now, and they're going to say, "Oh, bear market for Bitcoin. We're going back to 10,000," right? You're going to hear a lot of that exaggeration also. The best we can do right now is wait for this thing to stabilize, let it show its hand. Okay, I'm talking about Bitcoin, and anticipate a scenario. The scenario I'm looking for is that wave 4 consolidation, which means that's not a bearish trend. It means that it'll find support somewhere between where it is now, maybe 30K is the level, maybe it's slightly lower, but I don't expect to see 15K. Again, I could be wrong, but that seems to be unrealistic at this point based on the structures that we're seeing. So once it finds its range low, that's really where, if you're going to step into stuff, that's usually the best time to do it. And when it works its way back into the middle of the range, that's a good time to unload some inventory. Not all of it. Why? Because you don't know when this broader trend is going to resume. At some point, if this is truly a wave 4, that means at some point wave 5 will come about, just like on gold. It may take 6 months. It may take a year. So you have to manage your inventory based on that. So when it's pushing lows, you want to buy some more. When it's back into the middle of the range or slightly higher, you want to unload some of it, okay, or maybe a larger portion of it to see if it pulls back to the lows, and then you buy it back again, okay? If it breaks the range lows, which again would be an unusual situation, then you just hold off. You don't keep buying. I mean, that's how I would answer that question. So, again, this is not an all or nothing type of thing. You can't trade all or nothing, especially when it comes to long term. You basically have to manage like a core position. Just keep in mind, most of these altcoins are just another version of Bitcoin, from a trader perspective. They're all moving the same way, right? So would it be wise to maybe move some more of your money into Bitcoin, or maybe a stronger, maybe Ethereum, something like that? A leader in this space? Sure. That's exactly what we did back in 2017 to 2018. We got criticized because, if you follow these guys, you're going to lose all your money. Some people actually said that. Well, we basically got rid of all the junk altcoins that we were involved in. Okay, we put all that money into Bitcoin as it pulled back to 3K, and it turned out well, as you know. But we didn't know it was going to turn out well. We were basically taking a chance and managing our risk. Okay, so that's the best you could do. All right, anyway, so thanks for asking about that. It's a great question. Gabriel, have a look at BAT. All right, BAT. Let's take a look at Basic Attention Token. What's the story here? All right, so another beat up one. Again, similar situation. Now, this is interesting because when you go over my previous analysis sessions, when people ask me about these things, I talk about these levels. This is a failed low area. And I say, wow, if they can get back to such an area, that would be a good buying opportunity. And that's what you have right now. This is an inside bar off of a failed low. This is not exactly a lower low. Why? I mean, technically it looks like one, right? But the thing is, it's not that much lower, okay? This is not, relatively speaking, this is not a very dramatic separation, right? So, and plus, price is right back in the vicinity there. So that's actually a failed low, which is a bullish sign. So for something like this, I mean, this is what you'd want to see from something that's in a range-bound consolidation, doing something like this. Now, like I said before, Bitcoin is the leader though. So while this is a great location, if Bitcoin breaks, these things are probably going to break even though they're showing nice setups or they're showing nice locations because they don't trade on their own. So the high here is basically, what is that, like 90 cents? Or almost 92 cents, right? This thing is. So as a swing trade would go, or even for inventory, if you picked up some here, right, you'd be looking to get out of that or reduce your risk in the middle of the range. Your risk isn't very high, relatively speaking. I mean, the low here is basically 60, you could say 65 cents, even round it to 60 cents, okay, is where you would define your risk from. So you're looking at about 30 cents of risk. Can you make 30 cents? For 1-to-1, well, the midpoint here is $1.14, so you need to do a little bit better than that. Let's see, $1.23, probably up in this area. That would be where your 1-to-1 reward risk would be justified, around there. So that's where you'd be unloading some. Okay, if you're going to play the range-bound game. If you're going to play that game, this is the place to start. Right? This is definitely not a high, and this trend is not bearish yet. Okay. Like I just said, one of your risks that you have to keep in mind is Bitcoin breaks, these things are going to break. So what you want to avoid is don't get into hope mode. All right. So like I'm not against taking something here, whether it's a swing trade or if it's inventory on this thing. But if these supports break and you're looking at Bitcoin and Bitcoin's back to 33K and it's pushing lower and blah, 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 then it's probably a good idea to take your losses and not get into hope mode. A lot of these people that don't know what they're doing, right? They like Andrew mentioned earlier in the chat, his friends, they haven't sold the altcoins that they're in, so they're in from bad prices and they're buying more. Okay? Buying more isn't bad, but the thing is, if this market pushes further, they're probably going to be in more than they can handle, and they're more likely to bang it out as a reaction. You don't want to be in that situation. Okay? That's being at the mercy of the market. That's usually a result of being too big and not realizing the risk. Okay, so thanks for asking about that. What do we have here? Let me see. I'm just going back to the chat. Okay, cool. All right, Gabriel, I understand that this is subjective, but how much cash would you say should be kept on hand in the portfolio of a full... Okay, well, I mean, at this point, that is very subjective, but let me think about that for a minute. So, I mean, this is where actually you should be preparing to put some money to work in at least the better coins, right? Things like Bitcoin, things like Ethereum, because this is where you want to put that money to work. That thing is, if you're full in, you don't want to be banging them out now, right? This is really not the best time to be banging them out. You want to wait at least to see if they can test the middle of the range, like with BAT, for example. Or let's go to something more, let's go back to Bitcoin, since it's the leader. Right, so if Bitcoin can work its way back into the middle of the range, which is around that 48K to 50K area, that's really when you want to start reducing exposure. Okay, like I've been telling people, you know, but up at the 58, 60K, 65K, I always tell people that's where you should be locking in profits. No one wants to hear it up there because they all think we're going to 90K or 100K, right? But that's where you should be reducing your risk. Anyway, so here, this is really where you should be putting money to work. So if you're overexposed or you're still full in 100% and this thing works its way back into the middle, that's your chance to start reducing exposure, right? And going back into dollars or whatever your local currency is. The risk you take though is it breaks and goes lower, right? So that's the part I really can't help you with. You have to decide how much risk you want to take. If you're too big and you're like, man, that would suck if this thing breaks, you'd be losing a lot of money, then you should probably just start reducing at least 10, 20, 30%. But just keep in mind, this is not the best place to be unloading because you're unloading at a potential low. All right, so that's something to keep in mind there. But you have to balance what kind of risk you're comfortable with. All right, so like I said, if it breaks, it could be very painful. So thanks for asking about that. All right, so let's see. Pure XAU here. Oh, yeah. Thanks. Gold. Pure XAU. I like that. All right, Vince, what do you think of Dash? All right, let's take a look. So I haven't heard from this one in a while. So this one got beat up. I'm not surprised. All right, a lot of these garbage coins. I mean, what do they really do that's any value? We had on Trading Markets the other day, Talking Markets, not Trading Markets. I don't even know the name of my own show. Talking Markets. We had Leonard Lopin come on, and he's an expert on the programming side. He runs a Bitcoin ATM business, and he talked a lot about coins that actually had some future potential. He actually mentioned Cardano as one of them. He didn't mention Dash, I don't think. But anyway, I forgot to ask him because just there was a lot going on behind the scenes here. Because I'm producing the show, I'm running the show, and trying to be in it at the same time. Very hard thing to do. Anyway. I wanted to ask him, we were asking him like what coins he likes. I wanted to ask him what coins does he hate? Or what coins are complete garbage? I would love to have asked him that question. Anyway, I just mentioned that because when I think of Dash, that's just what I think of. So this thing broke this support over here. This pullback is steep, right? It gave this move back right here very quickly, right? That is not good. So you're in a failed low position and the broader trend is bullish. We can still make those technical arguments, all right? So based on the rules, this is a buy signal developing, as we see with many of these altcoins, right? They're following Bitcoin. This looks no different than Bitcoin. Same setup. It's basically like in a failed low area. It's giving us an inside bar. If it takes out the high of that inside bar, which is 238, that's a buy signal developing. So in that type of situation, if you go for it, it's an aggressive long. Why? Because this bearish momentum may still be in play. right? That's what you have to watch out for. And you'll know when it takes out the inside bar low. So if you buy it on the inside bar high and the next candle goes slightly higher, and the next two candles you're pushing the low, you should probably get out, because that's not what momentum reversal activity should do. Should not be taking out the low of the inside bar or retesting the low of the broad bearish candle. All right, so something to keep in mind there. If you get into something like this, again, you're looking for the middle of the range to start getting out, right? Taking profits, reducing risk. You should at least be 1-to-1, at minimum 1-to-1. So that's what you have to keep in mind. So I like a lot of these positions are great. A lot of these locations are great. And a lot of these coins look very similar. I mean, it looks similar to BAT, like we just looked at. All right, the thing is, it's all one big Bitcoin trade, so you can't take them all. So thanks for asking. That was a good question. Let me go further here. Zelta. Oh, from Latvia. Nice. How do you think of FIL Euro? FIL against the Euro? All right, let's take a look. FIL EUR. All right, on Coinbase here. All right, so this thing had a pretty decent pullback. So the broader trend, like many of these altcoins, bullish. You took out this range low. That's not very good, okay? Because this type of consolidation should lead to a consolidation breakout, not a support break. So just like, you know, and I suspect Bitcoin may be in a similar situation where it may be in a broader consolidation. That's what this is showing us right here. So even though you have the inside bar and everything else, this low is a lot further than this range low back here. I would be very careful with buying something like this. Now, if Bitcoin recovers nicely and this and that, many of these coins will probably do a similar thing. So something to keep in mind. But this structure is not as compelling as some of the other ones we just looked at. Like BAT looked better. You know, the other one we just looked at, Dash, even Dash looked better. So something to keep in mind there. Again, if you take something like this, I mean, this is a buy signal developing, but you must wait until the candle closes, just like all the other ones, following the rules. 78.39 is the high of the candle. If the high of this candle is taken out tomorrow, you have your buy signal, but your risk is going to be wide, right? Your risk is at $50, right? What's the low here? I'm sorry, $44. That's the low of that bearish candle. So that means, you know, you're taking like what, 40 points of risk, something like that, maybe slightly more. If you can't handle that, then you shouldn't be involved in something like this, okay, for a swing trade. Anyway, but that's what I see there. I would go for, if I'm going to go for the bounce, I would go for a better looking chart than this. Okay, it doesn't mean it won't work. It's just there are better looking charts out there. Okay, so thanks for asking about FIL against the euro. All right, so let's see. I love to tune into your streams because I appreciate that. Thanks, Johan. Yeah, I really try to keep the fluff to a minimum, right? No fluff, no nonsense. Could you have a look at Ethereum? Sure. See, that's why I didn't talk about Ethereum earlier, because I figured someone will ask about it, and I don't have to sit there and say, well, I went over Ethereum. All right, so let's take a look at Ethereum. Well, I got boxes all over the place on this thing. So how low? Let me erase some of these boxes. This thing has been saving them. Usually, like, it wouldn't automatically do that. All right. So where's the low here of Ethereum? 1860. Wow. No one saw that coming. When we were pushing, what was the high here? 43.84 was the high, which was made on just a couple of weeks ago, right? Just in early May there. Everyone, just think back, right? And I have to bring this up a lot because to help you recognize the nonsense next time when it's out. Everyone at this point was saying, oh, Ethereum will be by 5,000 by tomorrow. All right, Ethereum 5K. Oh, it can happen. Blah, 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 blah. Okay, Ethereum 1800. Okay, 1860. Why wasn't anyone calling for that? Oh, Ethereum's going to take over Bitcoin. Ethereum's going to do this. Nonsense. It still went to 1860. Is Ethereum a bad coin? No. Have the fundamentals changed on Ethereum? No. They're just overbought. Okay, so same situation. Keep something in mind, right? Everyone seeks news. Everyone wants, I need to be informed because I don't know what's going on, and the news will inform me. That's a form of, it's an illusion. It's an illusion of control. We have no control. So News will not help you in this game. I pay zero attention to news. People, how could you trade without knowing the news? Because price tells me what's going on. Price delivers the reality of what's going on. Now, price can adjust and I have to adjust to it. Okay, fine. But that's why I don't need news. All right. So my point is this. Has Ethereum changed? No. There's nothing different about Ethereum now than there was 2 weeks ago, except the price gave back a good, more than 50% there, like Bitcoin. So markets are, my point is, markets are irrational. They will do whatever they want, whenever they want to. So it's pointless to try to gain some sort of control by looking for or consuming the same information that everyone else is consuming. If it's on the public internet somewhere, or if it's on a public television station, whatever, it's irrelevant and useless information when it comes to taking action. All right? If you want to sound informed for your friends, okay, it has some value. But besides that, it has no value when it comes to managing risk or anticipating scenarios. If anything, it makes you react, and that's not good. So here's the thing with Ethereum. I just ranted about that, but Ethereum is a very similar situation to Bitcoin. Inside bar, okay, attractive price area. In fact, I had this area highlighted from previous analysis. This is probably from Monday's analysis here. And I talked about this level, 25. I talked about the level. It went a lot lower than 25, all right? And that was on Monday. I didn't say it was going to go there. I said that would be a great place to buy it if it could somehow go there. So it went there and it went a lot lower. My point is now, you have this inside bar. If you take out the high of the inside bar, which is 3,000, then you have a buy signal, but the risk is going to be high, just like in all these other things, right? 2156 is the low. You're looking at least 1,000 points of risk at that point from the swing trade time frame. Now, some people say, well, why don't you look at a smaller time frame? Because it's a different game, okay? Swing trades, I stick to a very specific set of rules, and I don't change the rules. I trade the rules. If I want to day trade, it's a completely different set of rules. I don't mix the two. So this is the swing trade time frame. So that's the kind of risk. I don't like that risk, to be honest. I think it's too wide. So I would wait on these things, on a lot of them, or find a coin that is less expensive, that has a similar setup, but doesn't require so much risk as far as, actual dollars. But if it takes out that high, you have a buy signal. How far can it go? I don't know. I mean, if Bitcoin is still the leader, if Bitcoin fools around or fails, you're going to see nonsense in this thing too. I am not anticipating new highs, okay, over the next couple of weeks or whatever. I'm not anticipating new highs because of that wave 4 situation. All right, wave 4s are very tricky, like I said. It may pop up to the middle and then start fooling around and pull back again and all that kind of stuff. All right, are new highs impossible? No, they're not impossible. But if we are in that wave 4, which is the logical progression from wave 3, right, chances are we are in a wave 4, then a new high is not going to happen, okay? But a funny story, something funny to let you know, it's possible to have a new high in wave 4 and then it fails right away too. So just something to look out for. Anyway, my point on Ethereum, same situation as Bitcoin. If we take out the low, if we take out 2156, you're going to see lower prices most likely. That bearish momentum will continue. Okay, you have this big bearish candle that you see here. That momentum may still be in play. All right, so you have to keep that in mind. Risk first. Okay, so thank you for asking about Ethereum. I know I talk too much. All right, how am I doing with time? Speaking of talking too much. Okay, not too bad. Let me see here. You've been warning about this for months. Okay. Well, so here's the thing. I've been warning about it because I've seen a lot of this stuff. People don't realize I've been in this game more than 20 years. Okay, you have these guys come out, I'm a 2-year, I've been in this 2 years. 2 years, you're still a beginner. All right, I've seen markets do a lot of wild things over 20 years, so I pretty much have a good idea of where risk is high and where risk is generally low, but there's always risk. Someone had asked me not too long ago, what coins do I think are safe? And I said to this person, there's no such thing as safety in this game. There is no safe. Not even in stocks, there's no safe. Not even in bonds. And bonds have a tendency to be safer assets. There's no safety in financial markets. All right. Okay. Oh, another one from German. Nice. All right, Andre, hey, can you take a look at EGLD? Would it go to 200 again? Okay, EGLD, I'm guessing that's a coin. Let's see. So yeah, I remember someone had asked about this one a while back. In fact, it was around the February. I remember this coin because I remember this nonsense over here. And I remember saying, don't buy it at the highs. Now, I mean, look where it went. It consolidated, broke higher, and people, oh, that dumb bald guy, he told me not to buy it at the highs, and it's much higher. Ha ha ha. Yeah, not anymore. Okay, so that's what happens when you buy at highs. Anyway, looks very similar to Bitcoin. So the question is, do I think it'll go back to 200? What are the highs here? Okay, 250. That's this high up in here, right? So 200. Let's see where that is. 200 is right about here. Okay, so that's a resistance. That's actually the lower high. So will it go back to 200? It's possible, but in this situation, it broke these supports. If Bitcoin goes lower, well, for one, this thing will probably follow because it looks very similar to Bitcoin. The question you need to ask is, where's the next resistance? Okay, your next resistance is this old support, which is 137. So you figure 138 to 140. That's where it's likely to go next and then turn, if it's going to stay in this consolidation or stay in this type of environment, right? Because I'm not anticipating new highs in any of these things. So most likely the middle of the range is more realistic. All right. So I hope that answers your question. That is, if we generate the buy signal, I'd be looking for that area. This area right in here would be a good place to be distributing your risk. It's an old support which is likely to act as a new resistance. Okay. The reason for that is because a lot of people who are long from here are now in hope mode, and more people tried to step in most likely. Look, there's even a little green candle in there. And now you have a lot of people long from that level, and they're going to unload if price can get back there because they just want to break even. That's just a human behavior, okay? And it's a market phenomenon for that reason. All right, so thanks for asking about that. All right, no problem. Gabriel, ETH, okay, I went over it. Travel, hey, nice to see you. Emil, watch out for the e-gold. Developers own a huge, oh, interesting. So there's a lot of coins out there. Right, and someone had mentioned this in our chat, in our Greenbridge chat, about Dogecoin, right? And someone had said that 12% or 12 wallets own 50% of the coins, and he shared some kind of link. I don't know how true that is, but if this is a similar situation, and you're trying to invest in these things, you're only fooling yourself, because if there's a small number of coin holders that own most of, or a large percent of the coins, you're at their mercy. So it's not really a fair market, because if they unload, you're stuck with it, right? So you need to stay away from those. Keep something in mind. This entire space is unregulated. People start, complaining about Elon Musk because he says this and he says that. Well, guess what? He's manipulating the market because he can, because there's no oversight. There are no regulators that will say to him, hey, you can't do that, we're going to fine you. There's no one to say that. So all these altcoins, a lot of them are just, these developers are basically, you're just paying their bills for them. I mean, a lot of them, because a lot of them don't really do anything. And they own all these coins and they're going to dump them on everyone, right? So you have to be careful at that. These are not sound investments. If you want a sound investment, you look at like Walmart, you look at like Intel, you look at, a high quality stock, Square. You look at a high quality stock that even, some of them even pay dividends. Those are stocks that'll be around a long time, and they're public companies, they're regulated by the SEC. Those are more sound, even though they still carry risk. These altcoins are complete garbage, most of them, okay, like cannabis stocks. Okay, anyway, that's my rant. Sorry about that. Okay, what else we got here? So thanks for mentioning that, Emil. Martin, can you see the volume? Okay, do you use volume profile when analyzing? This is a good question. I like your style. It seems that price action is simple, but I understand that this is a long practice. Oh, from Zekia. Is that the Czech Republic? Is Czechia? I'm sorry if I don't pronounce it right. So Martin, that's a good question. Volume profile. Volume profile is similar to something called market profile. Yes. Now I used concepts of market profile, And that really has a lot to do with the underlying order flow of things, which is something we can't see. I learned a lot from market profile. Market profile is an old perspective that was actually developed or came about in the 1980s, okay, early 80s. And it was a different perspective on a market. And it basically takes, it shows price, how much time price spends at particular levels. So it emphasizes levels more. And it puts the chart, it charts it on a horizontal axis, right, instead of a vertical axis. Anyway, the point is you could get a better sense of levels and order flow from such a technique. But I don't sit there and use specific market profile or volume profile techniques. I mean, there's a lot of subjectivity to it. So you still need to rely on other things to provide proof of things, right? So yes, I use price action and I focus on tools. That's what my ebook is about. Someone in the TradingView chat on Monday mentioned they bought my ebook. I couldn't talk much about it because, you know, it's TradingView. And the thing is, the information that I put in my ebook, I don't go pushing my ebook on people and all that stuff. But here's the thing. I wrote that, and I wanted to mention this. I wrote that ebook with one purpose in mind. I wanted to put together some sort of document that showed the techniques that provide the most value when it comes to taking some kind of market action, okay? Where can you get the most reality from the market? And that's the collection of techniques. You can Google these techniques, and that's my hope, is that you investigate them further. Elliott wave, trend lines, Fibonacci retracements, you know, chart patterns. These are things that are forecasting methods, and they allow you to anticipate or look forward. Not, if you notice, I don't mention one oscillator in that ebook because oscillators are backward looking and they're useless when it comes to anticipating. So you need to be able to think ahead of the market, not behind. So many people have a hard time because they're consuming the same junk as everyone else, number one. Number two, they're looking behind. And they don't even realize that because someone told them that some magical oscillator is the answer to all their questions. Oscillators are far from magical. All right, so anyway, just wanted to mention that. So that's my answer there about market profile. Thank you for asking. Let me see here. Okay, someone here looks like I got a, all right, never mind. Someone's trying to spam the chat, but YouTube blocked it. Thanks, YouTube. Okay, Schwartz, thank you. You are just, thank you. Hey, no problem, Schwartz. Time and wow, wish the other guys on YouTube would care enough to take the time to help us. Oh, thank you. I appreciate that. Well, you have to understand that they're all trying to sell something. They're on YouTube for one reason, and that's usually to market something, right? Content marketing, they call it. So I just hope that I can help people become more aware of those marketing techniques, because let me tell you, I've been in this game a long time and I've seen a lot of nonsense. I've seen a lot of hype, and I've analyzed their marketing techniques, and I'm sure many of you have too. I hope you have, but they still get a lot of big numbers, right? And they're obviously taking advantage of the way YouTube shares videos and stuff. But my point is, they're capitalizing on hope, right? They're selling dreams. That's what they do. They sell the dream, they sell hope. And I see so much of that, especially on the day trade side of things. I see a lot of that hope selling. You too can start out with a $3,000 account, and who knows, in a couple of months, you'll be making double or triple of that each day. You're like, wow, I want to do that. Right. But realistically, from a risk perspective, it's extremely unrealistic. Now, if you look at the fine print, which most people don't want to see, it'll say, historical results of blah, blah, blah may not be blah, blah, blah because, this person has unusual results. And if you read all that kind of nonsense. So basically, they're showing you in the fine print. But my point is, if you have a small account, you can't take big risks. Okay, you have to take risks that are relative to the small account. But people don't want to hear that. Like I said, they're not here to make risk. They're here to make money. It's my new saying. All right, anyway. So let me go back here. No problem, no problem. All right. Michelle. Hi, Michelle. SNX USDT, probably entry was at 16 and exit 24. Okay, so she's laying out a trade ID here. Let's take a look. SNX USDT. Let's take a look. Ooh, all right. I think, Michelle, you asked about this on Monday. right? So this is, look, this is a nice example. This looks very similar to that gold situation, where you have this high here. Look at this price action in between. You see this price action? This is a great example. This right here is a great example of what many coins are probably going to do over the next few months, and Bitcoin also, right? That's basically a consolidation and what wave fours typically look like, okay? So I'd be looking for that type of price behavior. Notice there are a lot of false breakouts, right? There's a lot of false support breaks. It breaks, gets everyone out, goes right back up into the middle, right? That's the type of behavior that you need to be prepared for. Anyway, so Michelle's question here is probably entry at 16, she's saying. This thing's at 16.27. Exit at 24. So let's see, where is 24? 24 is up at the range high. Okay, it's a little aggressive, but it's not unreasonable. Stop loss at 9.90. All right, let's see, where's that? $10 basically. Okay. All right, so Michelle is looking, she at least, Michelle, you have the levels at least placed within the structure of the market. That's a good start. All right, first of all. Now, if you're willing to take that risk, I mean 16 till 9, right? That's 7 points. If you're willing to take that risk, I mean, based on this current candle, the high here is 1843. So this is not saying 16. The high is 18, which means if you buy it at 16, you're still buying into this potential inside bar, which can break lower. So it's still a little early from that point of view. It might be a good idea to wait for another candle, right? Maybe another inside bar, and maybe it'll give you better prices, okay? But the risk, you know, that's a realistic area to define your risk from, okay? Even though you can even probably use this range low, this inside bar low, 1282, you can use that, but I mean, there's a better chance, of course, that will be touched. So as far as your target goes, that would be ideal if it can get to the range high, but you have to understand many will start jumping in front of that and getting out earlier because they know that everyone's going to put their price up in there. So this would be a better area right here, which is around, what, 22.90, 22 area, 21 area. That would probably be a better place to measure your at least 1-to-1. You know, if you want to look for 1-to-1 up there, or maybe slightly earlier, right? Because if you're buying near that range low, the middle is the best price to get out because there's a good chance it'll get there, right? Usually you could make 1-to-1 reward risk there. And a lot of times it's a very random area, so it doesn't go much further, right? It fools around. So that, if you can get into those situations, that's how I like to play those ranges if the market can provide such an opportunity. So when you're in a range, keep something in mind. It's the middle that really is more realistic. The range high, although it's possible, it's a much lower probability, all right? So like you may want to hold on to some and see if it gets up there, but you definitely should be taking something off in the middle if you got it near the range low. So I would, to answer your question, I would wait for another candle to see if you could get a better price. 16 is a little... it's still within that range, and this candle is not the best example of a candle, of the type of candle to get into. It's too wide. So thank you for asking. Okay, so, okay. Now there is some news from the U.S. government that it will heavily tax companies with Bitcoin. Research and leave the market while there is time. Bitcoin, okay, I don't know what that is. Okay. Again, I don't follow news. I don't know if that's true, whatever. But anyway, it's interesting. Okay. What are the common fib extensions to take profit? Okay, so that's an interesting question. There's no common extension to take profit. Basically, what you have to look at are the previous price levels. Now, if there's no price levels, meaning you have to use an extension, okay, I think I understand the nature of the question now. Right? If the market goes beyond historical price levels and now you have nothing to go by, well, you want to look at the 1618, right? That's usually a common place. 2618, like those would be the areas. Also, you want to look at whole numbers, right? So, for example, with Ethereum, when Ethereum started breaking 2,000 and 2,300 and 2,500, and there was no, those were all-time highs, right? And there was nothing to look back to. Well, you look at the whole numbers: 3,000, 3,500, 4,000. Even though the market may not peak there, those are good places to get out of some because a lot of people are going to be putting their orders around those whole numbers, right? So those are good places to at least get something off. And now, when I say those numbers, like 3,500, 4,000, you don't want to put it exactly at the number. You want to put it around that number, right? Lower. because everyone puts it at the number. You have to avoid what everyone else does, and it's something we can't see. All right, so thanks for asking. Michelle, ADA. Okay, how am I doing with time? All right, so I'm going to do this. I run these for at least about a minute, an hour 20, so I'm going to do it. All right, so let's take a look at Cardano. This is one of the ones that Leonard liked. He said they had a great development team and this and that. So if Leonard liked it, I mean, I have a lot of respect for Leonard. And what I like about Leonard's perspective is he really looks at the philosophy of things and a philosophy of human behavior in general. If anyone understands human behavior, it's him. Okay, so I really like that. He's not just one of these, like, computer heads that's just, impressed about price action. He's very thorough about, human behavior. And that's really the key to all this stuff. It's not, oh, I'm an economist, right? It doesn't mean anything. Prices are irrational. You really need to focus on human behavior. All right, anyway. So Cardano, look at this. This is a wide range candle, inside bar. I like the inside bars. I really do. They're just too wide. The risk is too high here. It touched the level on my chart too. I put this level in there on Monday. And what was that? 180. I'm sorry. This thing went as low as $1. Wow. So again, it shows the dependency on Bitcoin that's still there, right? Bitcoin goes to 30K. This thing went to $1. So risk is still too high here. I would wait for more stability. And that's for a lot of these coins. And same goes for Bitcoin. I prefer to wait for stability. One candle is not stability. What I need to see is some price structure, right? Like I said, I like this, but I want to see another test of maybe this 180 area or something, followed by a pin bar, maybe like a little mini double bottom. That would give me much more confidence in something like this. Now, can you buy this thing right now? I mean, you can. You just have to be comfortable with that risk. And when you look at it from a reward risk perspective, right, what's the high on this thing, right? The high is $2.47. If you're buying this thing right now at $1.80, I mean, you're barely getting 1-to-1 on that. And it needs to go all the way back to the high, which is a lower probability scenario. So I'd rather wait for the higher probability, okay? Like I said, your risk profile or your risk tolerance is going to have a lot to do with that. I prefer to wait for better prices if the market can deliver them. Again, these things are dependent on Bitcoin, okay? So thanks for asking. One big Bitcoin trade. Okay, Nin, block crypto numbers. Oh, okay. Block. Okay, yeah, I see. I understand. Sure. So, yeah, just got rid of them. All right, thanks. All right, how's Chainlink? All right, Mike asks about Chainlink. That's another popular one. Chainlink. Look at this one getting beat up, right? Oh, Chainlink. Chainlink is going to solve all these problems, blah, blah, blah. Not really. It's just as, it's not immune to the Bitcoin pullback, right? All right, fine. Inside bar, just like all the other ones. I'm probably going to be repeating that on all these. Inside bar, right, off of a failed low situation. That's what you have here. Is this a bad level? No, it's not a bad level, okay? If you like Chainlink, you have the inside bar. A lot of these coins, like I said, are fitting the rules. This fits the rules, right? You have a support being touched. The broader trend, we can still argue, is bullish, okay? Yes, it took out this low over here, but it's right back inside there, which means it's a failed low. It's an inside bar, okay? You're just facing Bitcoin risk because if Bitcoin breaks, this is going to break too, most likely, and you have this large bearish candle, which, like Bitcoin, if that bearish momentum is in play, it's likely to see lower prices. So you have to decide, if you're willing to take that chance, right? If you want to go for something like Link. But like I said, don't take them all because it's all the same trade, right? You don't want to get caught in like 10 different trades and they all go the same way on you. So the high here on Link is 33.18, so basically 33.20. If that high is taken out, you have your buy signal. So I have to repeat that the inside bar alone is not a buy signal. It's a potential setup, and it can take out the low of the inside bar, right? Which would be then a sell signal. So you have to be prepared for that, and you have to manage that risk, based on what's comfortable for you. Okay, I got another question. How can someone tell whether a market is in consolidation or bearish phase? Can you show in BTC? Okay, that's a very good question. Let's go back. I mean, everyone's questions are good, but that's an interesting question because that can confuse a lot of people. So how can you tell if a market is in a consolidation relative to bearish? Well, it's going to be dependent, first of all, on your strategy, right? The time frame of your strategy that you're considering. So for example, if you're day trading, then you can argue that this is a bearish trend if you're day trading, right? But we're not day trading. So this is not a bearish trend. Now, you'll have a day trader come in here with his 5-minute trade. Yes, it is. It's a bearish trend. It's bearish. It's not bearish because the bigger picture is still bullish. So you have to look at the magnitude of your time frame first of all. That's the first thing. So how do you determine if something is range bound, right, rather than bearish trend? You should have a range bound market obviously forms a channel, right? So you should be able to see, like for example, it's still too early. We can't say this is bearish or range bound, although I'm leaning toward range bound. Why? Because of the characteristics of a wave 4. But with something like Bitcoin, if we bounce up and we retest that 30K again and we don't break it, then we're most likely range bound, because a bearish market or a market that's in a trend breaks supports. It doesn't hold them, okay? So that's why I would suspect that. Now, if we break 30K, then we're likely in a bearish trend. But the thing is, for me to decide we're in a trend, I mean, a trend is a pretty large magnitude idea based on the time frame we look at. We're probably going to have to take out like the 20K low, right, for me to say, okay, this is probably in a bearish trend. But even then, I'll probably be calling for consolidation. Am I biased? Well, no, I'm going by this broader structure. And this broader structure is very bullish. Our historical structure here, it's very bullish, and it's going to take a while to turn that into bearish for the time frame that we watch. If this thing works its way to 20K on shorter time frames, sure, it'll be bearish. So I hope that answers your question. It's all relative to time frame, okay? And again, I'm focusing on swing trades. So what will help you, a thing that will really help you make that determination is learn Elliott wave, because Elliott wave assigns this type of behavior to a wave, right? So wave 1 is usually a bullish impulse, right? Wave 2 is typically a corrective or consolidation type of wave. Wave 3 is an impulsive bullish type of wave. If we're talking about a bullish trend. Wave 4 is typically a consolidation, right? So if you can assign waves to these things and you know the characteristics of the wave, you can better anticipate what's likely to develop before it develops, okay? And then you wait for the market to provide evidence. Okay, so thanks for asking. Show me the chart and I will tell you the news. Right, that's exactly right. Okay, someone had asked about Iovance yesterday, said, or maybe it was earlier today, I can't remember. And I took a look at the chart and it was just like a vertical bearish candle. And I said, I don't know what's going on, but it looks like news, right? Because that's typically a reaction to news. XNT. I am looking for BSV USD as lower risk than other coins due to the smaller inside bar. All right, XNT, let's take a look. BSV. One thing I like about doing these streams is people call all these, they ask me for all these different coins, and a lot of these coins I may not even look at, right? I might even be familiar with them. So as a community, by putting more eyes on these things, it provides a lot of value because, again, BSV, I don't follow BSV. But now it's on my radar, right? Nice. So anyway, thanks. So his question is lower risk because of the smaller range of the inside bar. How much is this thing? $192, basically $193. Okay, I see what you're talking about. And it's a failed low, similar situation. But again, all right, the setup is there, right? If you take out the high, what's the high? 202. And the risk can be defined, the maximum risk 140. Okay, you have to look at this low here because it can go there. If you want to look at the inside bar low of 162, I mean, that's your minimum risk, right? That's your minimum risk. So it can go lower than that, right? So it has to take out 202 for the buy signal to be in effect. That's number one. Number two, you're still dependent on Bitcoin. So this bearish candle may be in play. If you want to go for it, again, you have to decide if you want to take that trade. There are many in this position, and they're all the same, right? So even though this one I might have a smaller range inside bar, it's all the same idea. And if Bitcoin breaks, they're all going to break. No matter how good or how compelling the signals look, these things don't trade on their own. All right? I have to remind people of that constantly. So yeah, you have those things going for it. Use Bitcoin as your guide, and if you're willing to take that risk, those are the levels to measure from. Okay? So thank you for asking about BSV. Hello from Austria. Nice. Thank you very much. Hey, no problem. Does BTC USD shorts versus long positions mean something in the long run? And will it show guidance? All right, that's a good question. Some people bring up those things like BTC longs, BTC shorts, and it's basically supposed to chart, I guess, the, yeah, let me see if I can get that here. BTC long, can I get that? Where is that? BTC, is that, let me see if I get the right symbol. Is it Bitcoin longs? Hold on. I want to get that symbol on here. Because the thing is, people ask about those all the time, right? Let me see. I know I have it here somewhere. Hold on. Bitcoin, BTC longs. Where is it? BTC longs. All right, here's shorts. Okay, here's longs, right? So basically, BTC longs, right, and BTC shorts, it's supposed to show you some kind of open interest or, you know, the amount of longs or shorts in these things. I mean, I guess they can provide some clues. I mean, what is this telling us right now, right? Longs piled back into this thing and looks pretty good, right? Broke out this high here, broke this high. So you'd expect that this trend would continue, okay? Not much on the short side. So this is just, all this is telling us is that the market, I guess retail traders or whatever Bitfinex is measuring there, it means there are a lot more longs in this thing right now relative to shorts. Let's take a look at BTC shorts, right? Is that going to be the inverse of this? Let's take a look. And to answer your question, as far as do they provide any clues, not really. I mean, it's just a lot of times less is more. I know everyone thinks more is better because that's human nature. Here's BTC shorts on Binance, right? I mean, look at that. What does that tell us? Well, shorts are out of this thing, or shorts have basically shorts piled in and now they're out. I mean, what is that really going to tell us? Not much, because this is basically reactive order flow. Is it, you know, it's people reacting to the moment. I mean, could it have helped us earlier in other situations? I don't know. I don't use it. So I'm focused on levels and potential around levels. This thing can be very erratic because, you know, BTC shorts, right? They piled in. So what? You should have bought, you know, on this break of this high here, you should have basically gone short Bitcoin because, you know, oh, it's a breakout. You know, it's going to have some kind of push higher, which means Bitcoin should go lower. You could try to play that game, but I don't see much value to it. And it could be very confusing at times as well. Like I said, more is better. I'm sorry. Less is more in this game. The less information you could make decisions on, the better. All right, that's why I keep my charts as simple as I do. I don't use any oscillators or any other nonsense because it's not necessary to get actionable information. It's just human nature to think more is better. And you go to these platforms, right, these trading platforms like Binance, and they just load these things up with all kinds of nonsense. And it looks like a slot machine. I mean, that's what it reminds me of when I see all this crazy stuff going on. And most of that information that you see flickering around is useless. It doesn't help. But what it does is it stimulates you to trade, right? So that's these, you know, I don't really have much to say about these. But so thank you for asking, though. Okay, okay, no problem. Ramana, is not even close to try. Okay, hold on, let me see if I'm on the right part of the chat here. I'm going to wrap this up here in just a couple more minutes. I just like to talk a lot. Okay, so let me see here. All right, is it not even close to try? Regarding the U.S. government requiring taxing, okay, they talk about enforcing existing laws. Okay, thanks, Ramana. I know, okay, a few minutes ago, but can you give resistance levels and support levels like you normally do? All right, so back to Cardano. So support and resistance, well, I have them on this chart here. So maybe you asked that question after I put them on here, but your resistance is basically 250. It's that high, right? And your support is this old resistance, 150 area, which it's nicely above now. You're in the middle of this range right now. So this is actually a really bad place to be getting involved in Cardano in terms of risk, because it can go either way from here, right? So, but those are your levels though. Those are your range levels on that thing, your support and resistance. So thank you again for asking about that, Ramana. Oh, nice, Michelle, thank you. Okay, BTC USD longs, right. So like I said, with those charts, they, you know, I mean, you don't need them and you could still anticipate as long as you're using the techniques that can forecast something, right? That put you in a position of anticipating, meaning you're identifying support levels. Trend lines, for example, can give you a better idea than something like BTC long, BTC short. A lot of times it's just an illusion that these other charts are really helpful. They're not really that helpful. If they were, then people would all be on top of them, right? Making money, and then any advantage that those charts offered would go away. That's the way markets work. That you can't give away, if you have like a system that really works and this and that, whatever, no one's giving away that advantage. All these experts and all these gurus and all these other people, I have my 90% win rate system. If they truly had something like that, they wouldn't be selling it. They would be using it to make money. Some people ask me, then what are you giving away? I'm not giving away anything. I'm just showing you how to look at the market from a perspective that allows you to prepare for scenarios. I'm not giving away any advantages. Okay, it's just a matter of knowing what's realistic proportional to the market. That's where a trade idea begins. All right, so thanks for asking. What about gold miner stocks? Should we trim? That's a good question. I got to answer that because we've been in these, many of you know I've been pushing the gold miner stocks back in February. I was heavy into those, right? And look at them now, very nice. So the question here is, should we trim or get out? Definitely trim. No, there's nothing wrong with taking money off the table when it looks like that, right? As far as getting out completely, there's no reason yet. And gold still has some more room ahead of it, right? We have that 1900 area, 1950 area that gold may test. And these things still have some room to benefit as well because we are in that seasonally bullish time for gold. So definitely lock something in. Like with our gold swing trade, all three targets were reached. We're out of it, okay? Even though gold still has some more potential to go higher, we're out because that's where the targets were. So yeah, I would definitely be taking something off the table. It's never a bad habit, ever. If you're in, take 10, 20% off. Just take something off, right? You're capitalizing on the buying activity while it's there. They're very happy to take it off your hands, and you're distributing risk. A lot of times, what interferes, and I had a conversation with someone in our chat room yesterday about this, greed enters the picture because you're like, well, what if it goes higher? I can make more money. But it's about the risk, right? It's not about if it goes higher. You're never going to get the top. So you have to keep that in mind. Greed gets in the way. It's human nature. Don't let human nature get in the way. You have to minimize it as much as you can, right? So that's why I always say, if something goes vertical after you get into it, you don't have to take the whole thing off, but just take something off. And then you let the market do its work. And at some point, the market will give you a more clear signal. And that's probably when you should reduce your risk even more, or take the whole thing off, or raise your stop, or whatever, that kind of adjustment. So thanks for asking about that. Okay, cool, no problem. Oh, great, Shubham, do you think gold will break all-time highs? I know Shubham was asking these questions. He must have asked this like 10 times on the Talking Market show, and there was so much going on I couldn't answer those questions. Yeah, gold in this move that gold is in right now, I mean, it's possibly, like I was saying before, it's possibly in a wave 5. So if that's the case, then going to 2000 should be in this leg. I mean, it's within reason, right? Where's 2000? 2000 is all the way up here at that August high, right? It's all the way up there. So it's within reason to expect that over the next few months, but things can change, right? So for example, if nothing changes, and we go into inflation mode and hyperinflation mode, which is the path looks like that we're going in, thanks to our wonderful Fed and all that other stuff, then it would not be surprising to see gold pushing 2,000, especially with all the seasonal demand and what do you call it? You can't find any physical gold anywhere, right? There's a shortage of physical gold and silver. So with all those pressures, it's possible. It doesn't mean you buy it, like I said before, you don't buy this thing right now because it's risky right now. It can also pull back a good 20% or 30% for no reason, okay? The fundamentals on gold, by the way, haven't changed since the 1720 low, or even back in February, back in January. The fundamentals of gold haven't changed. It's the perception of how interest rates are going to be managed that keep fluctuating gold all over the place. 1 minute the dollar is strong, bonds are going lower, and then it changes, and then the Fed hints about inflation, and then the Fed mentions something about possibly raising rates. And so any kind of that stuff, the Fed has not said that they're going to raise rates. They've hinted toward using tools that are available, which is a what do you call it? It's like a nice way of saying they're going to raise interest rates. It's like a sugar-coated way without saying the word raise, right? So my point is, if they do something like that and they start raising rates, especially if they come out with a surprise rate hike, which they can do, then gold will turn fast because gold is not seeing that right now, right? So that's what you have to keep in mind. And gold may push to 1950 and then something like that could come out. What you have to keep in mind is, as long as gold maintains this structure of higher lows and higher highs, I don't care what the Fed says, I don't care what they do, okay? Until these structures break, even if we get like a dramatic pullback, as long as the structures are intact, I expect gold to work its way higher. So for a long, we need to wait for such a pullback. All right, so that's what I have to say about that. Don't react to news. Like I said, I always tell people, don't listen to people, listen to price. The Fed, they react to things. The Fed also has its own agenda and whatever they're going to do. Plus, they're politically motivated. Even though they say they're not, they still have political stuff going on over there, right? So you have to be careful of that rate hike thing. And that's the thing with gold. That's why I don't sit there and pour all my money into gold, because there's still that risk. And if we pull back, then we can have another buying opportunity. That's what I'd rather wait for. Okay. Otherwise, with my long positions, I have AG, I have Wheaton Precious Metals. AG, I'm waiting for targets to be reached. And Wheaton, I'm just going to hold on, longer, but I'm probably going to start taking some of that inventory out because I've been sitting on it for a while. I'm just not really worried about it. I'm a strong hand. And I don't see an actual reason to sell yet. So I'm just giving it more of a chance. But should I take some off the table? Yes, I should. Okay, so anyway, that's my long answer about gold. All right, I got to wrap this up. I'm talking way too much, and I know some of you are in countries, I always say this, that are like, it's like midnight over there. You people need some sleep. All right, so people saying inflation and all gold will break all-time highs. I mean, Shubham, I agree with that. We're seeing signs of inflation everywhere. Okay, just check out the price of copper. Check out the price of some of these food prices. I mean, it's there. And now the Fed is starting to say, well, yeah, it's there. It's kind of there. So if things get out of control, we'll have to try to do something about it. That's what the Fed said in their meeting minutes. So they're acknowledging that, yes, we have inflation. It took them a little while to realize this, but yes, it's there now, right? So if they come out with their tools to raise rates or whatever they do, that's going to change gold. So you have to be careful. So that's why I'm using the gold structure as my guide, because even if they raise rates, if gold is in its bullish season, one rate hike may not be enough to knock gold off of its bullish trend, right? When gold goes back into its seasonally weaker time, that's probably when you're going to see supports break. All right, anyway, that's just bigger picture stuff to anticipate. So thanks for asking. I don't trade on fundamentals, by the way. Okay. So let me see, Ramana, does wave have to be significantly higher than wave 3, or wave 3 top can be a wave 5 top? I'm not sure of that question, but does wave have to be significantly higher? Well, the new wave, right, we have to break whatever the previous wave was, right? So if we're in wave 4, we need to take out that wave 3 high, and it needs to close significantly above, okay? You can't just like fake out and turn right around, then it doesn't really count. Okay, but if it closes decisively above, then we can probably say we have the break, and at that point we can confirm wave 5. Like for example, with gold, we'd have to probably push 2100 or 2200 to say, okay, we're in wave 5. But that's a long move to confirm, right? That's another 150 points or 200 or 300 points from here. You think we're going to sit back and do nothing? No, if we get buy signals, we're going to buy into it. We just don't think in absolutes. That's all. Some people may say we're in wave 5 now, but it's way too early. We may not be. All right, that's the way Elliott wave works. It's very subjective, right? You cannot use it in an absolute way. Okay, so let me see what else I got here. Are we in a confirmed bear? No. We're not in a confirmed bear market. We're in a wave. I'm confirming the wave 4, right? The 40K break was confirmed wave 4. That's not a bear market. All right, bear market is we're taking out lows. We've taken out some supports, but we still have plenty of supports, and we're most likely in a consolidation. The bigger picture on Bitcoin has not changed yet. So markets don't go from bull to bear. They usually don't go from straight. They're not binary like that. They usually consolidate before they go into a new phase, like a bearish market. So it's too early to call it that. You're going to get a lot of people calling it that because they don't know, all right? Or they're looking at their 5-minute charts, which are going to mislead you. All right, so thank you for asking. Inflation, just look at minimum wage. Right, their inflation is, again, the Fed uses inflation to stimulate things, right? It's a monetary tool that they use. So they like some inflation, but their agenda is they're supposed to keep it under control so it doesn't get out of hand and we don't have hyperinflation, right? That's the fear, and that's what it looks like. It looks like we're going that way until they start doing something about it, and they've only been giving little hints. So like I said, don't trust that the Fed is looking out for your own good or anything like that, because they're not. They have a job, and that job is to make sure that markets function, not for the markets to do well or for investors to make money. They could care less. That's not their job, right? So just something to keep in mind. They're not going to come out and tell you what they're really going to do, and they can come out with a surprise. I've seen it before. So, and no chart is going to tell you that the Fed is going to come out with a surprise rate hike. All I'm saying is it can happen. It's something that should be within your range of scenarios, a possibility, okay? So, all right, cool. So I'm going to leave you guys with that. I know I talk way too much. All right. So I want to thank you all for spending your afternoon with me here today. Again, if you're new to Greenbridge, check out our website. All the information, if you just click on Show More on the bottom of the video, all of our links are there and all that stuff. So you can check that out. We have a 7-day free trial. One thing I have to say about that is we don't have, people come in and they expect a trade every single day. We don't have lots and lots of trades. Right, we have maybe a few a week right now across all the different markets that we're involved in. It could be a stock, it could be an ETF, it could be a coin, it could be whatever. We've been really quiet on the Forex front because things have been messy there for a while, so we haven't called any Forex trades for a little while. Except, gold. Gold is a CFD, so if you want to count that as Forex, okay. But we haven't called like euro dollar or anything like that. All right, so I just wanted to make sure people have a proper understanding and have the right expectations, because then they come and they're like, oh, you guys are too slow. But we're very conservative and we're very patient about a lot of trades. Our goal a lot of times is to protect people from these situations. And so a lot of times what that means is no trades. There's been a few weeks where we come into the chat room and there's no trades. There's no trades. You got to wait. We got to wait. We got to wait. And we really force that on people. It's uncomfortable. And trust me, I don't like to sit there and tell people, hey, don't trade. But if that's what the market says, then that's what I tell people. I'm going by what the market says. And like I said, we're very conservative. So sometimes we'll miss stuff. Anyway, I just wanted to let you know about that. So again, enjoy the rest of your day. The rest of your evening or wherever you are in the world. And thank you very much for watching.